Just under 3,000 homes sold across Edmonton in May, but the numbers don't tell the full story. This month, I'm breaking down what's really happening behind the stats and what to watch for heading into summer. Because depending on what you're buying, the story shifts fast. Detached homes, up $33,000 year over year. Condos, slower to sell, and many are sitting for nearly 6 weeks. So what does that mean for your summer move? Let's look at the real numbers because emotion is expensive, and this month's market has a few twists you'll want to see coming. Let's zoom out and make this math make sense. Hey, what's going on, everybody? It is Tristan here, your numbers-driven Edmonton realtor. And if you're new to the channel, welcome to where we turn real estate data into calm, confident decisions. Every month, I break down what's actually happening in the greater Edmonton area housing market, not just average prices, but the median sale price, how quickly homes are really selling, and what that means for your next move, whether you're upsizing, downsizing, or buying your very first home. Now, this update includes detached, semi-detached, row townhomes, and apartments. And we're pulling both median and average prices so you can see the full picture. Stick around to the end where I'll show you which segment is seeing the fastest sales right now and which one's quietly getting price cuts. Let's start with a bird's eye view of May's numbers across greater Edmonton. While each property type tells its own story, the big picture gives us the context we need, especially if you're buying and selling at the same time. The median sale price across all residential types landed at $444,000, which is down slightly, $1,750 from April, but up $23,000 year over year, which works out to about 5.5% annual growth. It's not just seasonal, it's steady upward momentum. On the average side, May landed at $464,000, which is actually down from $470,000 in April, but still up more than $22,000 from last May's $441,500. So while the average took a small dip month over month, the year over year trend remains solidly upward. That said, I always steer with the median. It's a more accurate read of what most people are actually paying without the skew from the outlier sales. Now, let's talk about pace. Median days on market in May was 19. Just 1 day longer than April's 18, and 3 days faster than last May's 22. In a market where buyers are showing up with financing in place and ready to write, that time difference matters. A few days can easily separate the winning offer from the one that never gets a reply. The average days on market came in at 29, revealing the gap between homes that are dialed in and those that need a pricing or presentation reset. As for inventory and absorption, this is where the structure of the market really shows. May brought in 4,915 new listings and logged 2,967 sales, putting the absorption rate at 60.4%. If you're not familiar with the absorption rate, it's the percentage of new listings that sell in a given month. Below 40%, buyers are in control. 40 to 60% represents a balanced market, and over 60% sellers have the edge. So at 60.4%, we're technically in seller's territory, but only just. It's a measured, calculated market, not a frenzy. We're sitting at about 2.2 months of inventory right now, which is tight, but not overheated. Pair that with a stable days on market and the shape of the market comes into focus. Efficient, fast moving, and selective. Homes that are priced and prepped well are getting picked up quickly, especially in the detached and semi-detached segments where demand is still on pace with supply. Let's start with detached homes, where the majority of the market activity and buyer focus still sits. In May, the median sale price came in at $533,000, slightly down from $535,000 in April, but still up $33,000 from May of 2024. That's a 6.6% year over year growth, which shows that we're still trending upward even with short-term shifts. The average sale price was $580,000, which is down slightly from $585,000 in April, reinforcing that while prices are still strong, we're not in runaway territory. As always, I focus on the median because it gives us a clearer picture of what most buyers are actually paying. As for pace, median days on market was just 16, down from 18 days last May, and a little bit faster than April's 17. Average days on market came in at 27, showing that while the best homes are moving fast, others still require the right pricing and prep to attract offers. Now let's look at inventory and absorption, where the shift towards balance becomes more noticeable. So in May, things got a little bit interesting. We saw 2,955 new detached listings come online and 1,730 sales, a slight bump from April's 1,576 sales. But here's the catch. That increase in listings pulled the absorption rate down to 59%. In April, with fewer listings, 2,324 to be exact, and similar sales, the absorption rate sat at 68%. So even though buyer activity edged up, inventory outpaced it, pulling us out of deep seller's market territory and nudging us closer to balance. Now, the key takeaway is that the detached segment is still moving well, but it's trading that springtime frenzy for a steadier, more predictable pace. Homes that are well priced and well presented still have a clear edge, but gone are the days of everything flying off the shelf. If you're selling, timing and prep are still everything. Buyers are engaged but selective. They're not stretching for homes that feel dated or overpriced. And if you're buying under $550,000, expect some competition, especially for listings that tick all of those boxes. Updated kitchens, finished basements, efficient layouts. Detached homes continue to lead the market, but the data tells us that this segment is now about precision, not panic. The demand is there, but so is the scrutiny. Value moves while noise waits. Semi-detached homes are quietly becoming one of the sharpest plays in the market right now. In May, the median sale price was $435,000, which is up from $410,000 last year, which represents a clean $25,000 year-over-year increase. The average price came in at $440,000, showing that this segment is holding tight and consistent without much distortion from high-end outliers. That's what makes it so compelling. This is a segment driven by function. Semis are absorbing demand from both ends of the affordability spectrum. First-time buyers who can't stretch into detached homes, and downsizers who've cashed out of larger properties and want something that's easier to manage. These homes are also moving fast. Median days on market was 18 days, just a couple days slower than detached. And the average days on market was 25, showing that strategic listings aren't sitting. Now, here's the key: inventory and absorption. In May, we saw a noticeable shift in the semi-detached market. Listings climbed to 435, more options for buyers, but sales slipped to 289. That drop pulled the absorption rate down to 66.4%, which is still a seller's market, but it's less aggressive than April's 79.3%, when there was 387 listings and 307 sales. That month-over-month shift tells us something important. Semis are starting to balance out. More inventory is creating breathing room, and buyers are responding by moving a little bit more selectively. But don't mistake that for a slowdown. Demand is still healthy, especially as detached homes continue to push past that $530,000 mark. And when that happens, a semi-detached at $435,000 doesn't just look like a backup plan, it starts to look like the smart plan. Buyers are making intentional trades, a bit less square footage or one fewer bathroom in exchange for financial comfort and a yard they still get to enjoy. And in this market, that's a win. So if you're selling a semi right now, market it as what it truly is: a strategic, efficient, and lower maintenance alternative to detached homes. It's not about settling, it's about smart ownership that fits real budgets and real lives. Before we jump into townhomes and condos, quick note: if you'd rather read all of this instead of watching me talk through it, I've typed everything up into a clean blog post on my website. Same data, same insights, just easier to scroll through if you're in research mode. So if you're the kind of person who likes to see charts and numbers laid out, I totally get it, as my preference is usually to have both the video going and see the facts laid out in front of me. Just head to the link in the description and you'll be able to find it. And hey, if you're finding this breakdown helpful so far, it means a lot when you hit that like button and subscribe to the channel. That way you will never miss a market update and you'll stay ahead of the curve before the curve even moves. Let's move into row and townhomes, a segment that's quietly gaining traction and could become one of the most talked about plays through the rest of 2025. These homes are sitting right at the intersection of affordability and functionality, and buyers are catching on. In May, the median sale price landed at $310,000, which is up from $295,000 last year, a solid $15,000 year-over-year gain, pointing to steady demand, but still well within reach for many first-time buyers. Interestingly, the average price came in slightly lower at $307,000, which is unusual but telling. It suggests that this segment isn't being pushed up by luxury units, but instead it's anchored in pure practicality. On the pacing side, median days on market was 19, which is up a touch from 16 a year ago, while the average days on market came in at 27. So we're seeing that familiar pattern. When a home is priced right and shows well, it moves quickly. When it's missing key features or needs update, it tends to linger. Now let's dig into inventory and absorption, where townhomes are showing a standout trend. In May, we saw 642 new listings and 482 sales. That's a 75.1% absorption rate, the highest across all property types right now. But in April, the rate was already solid at 68.8%, with 570 listings and 392 sales. But May is where demand really kicked up a gear. Here's the key insight. While detached and semi-detached markets eased or balanced, row/townhomes accelerated. This isn't just a fluke, it's a market signal. Buyers aren't seeing townhomes as a downgrade. They're seeing them as the smarter play. So what is driving that shift? It's price pressure up the ladder. Detached homes often cross the $530,000 mark. Many semis are now hovering right around the $430,000 range, but townhomes, you can still find strong options under $325,000 with ground level access, modest outdoor space, and smart square footage that actually makes sense. For a growing group, like single parents, multi-generational families, first-time buyers, and even early-stage investors, this segment offers both affordability and livability. They're not just asking, can I afford it? They're asking, can I thrive in it? And when a unit checks both boxes, it doesn't sit long. If you're selling a townhome right now, your advantage is clarity. You're not up against million-dollar listing. You're offering practical, efficient homes that work. Highlight things like the floor plan flow, storage solutions, heating efficiency, and low maintenance exteriors. A home that's simple to live in and easy to run will win in this lane. For buyers, this might be your last clean shot at securing ground level ownership under $325,000 before more competition pushes those prices up. And as more eyes shift to this space, the best units will always be the first to disappear. This segment may not grab headlines, but it's where momentum is building. And smart buyers are quietly locking in value while the spotlight's still elsewhere. Apartment-style condos remain the slowest moving segment in Edmonton's market, but that comes with opportunity. In May, the median sale price was $198,750, which is up slightly from $192,000 last year, a 3.5% increase, and the softest growth among all property types. The average price came in at $213,792, which reflects some higher end sales, but most activity is still concentrated around the entry-level units. Days on market here are significantly higher than all of the other segments. The median was 28 days and the average was 40 days. Listings are sitting longer and serious interest is slower to materialize. With 883 new listings and 466 sales, the absorption rate hit 52.8%, a balanced market, but the lowest absorption amongst major housing types. Condos are attracting cautious buyer bases. First-time buyers weighing costs against rent and downsizers who aren't in a rush. Demand is focused on well-managed units with underground parking, updated finishes, and reasonable condo fees. Units lacking those features tend to kind of stall. For sellers, overpricing is the biggest risk. This segment demands clear, data-backed pricing, not sentiment. For buyers, this may be one of the few remaining paths to ownership under $225,000, but quality matters more than ever. Let's wrap this all up with a few key insights and what they signal as we head into summer. First, the spring chaos is cooling, and this time it's not just about seasonality. The pace is slowing because some buyers are stepping back, not just getting pickier. Whether it's rate anxiety, price fatigue, or decision paralysis, the numbers show that demand is starting to thin out, especially in detached and semi-detached segments. Second, inventory and absorption tell the real story. In detached homes, new listings surged in May, but sales didn't keep up pace, dropping the absorption rate from nearly 68% in April down to 59% in May. That's not just balanced, it's a sign that that urgency is fading. Semis followed a similar trend, sliding from 79% to 66% absorption, even as new listings rose. We're still in seller's market range, but it's a softer edge, not a sharp one. The exception is row and townhomes. It's the only segment where sales increased month over month, pushing absorption to 75%. The highest across all property types right now. That tells us that affordability is now the primary driver. Buyers are realigning expectations and townhomes are stepping into the spotlight. Third, affordability will shape everything heading into late summer. If rates hold or drop slightly, we could see a rebound of sideline buyers, but not at the top end. Instead, entry and mid-range segments like townhomes and semis are where the action will likely concentrate. And finally, this is not a market to wait and see. It's a market to watch, understand, and act on deliberately. Demand is still present, but it's no longer automatic. Buyers need strategy and sellers need precision. If you're moving this summer, let the numbers guide you, not the headline. There's opportunity here, but it's moving with more calculation and less noise. All right, if you've made it this far, you now have a clearer, sharper picture of where the Edmonton market is right now and where it's likely heading next. Whether you're thinking about selling, planning your next purchase, or just watching for the right window, these are the moments where strategy pays off. And if you're not sure how all of this applies to your specific situation, I'm here for that conversation. No pressure, just perspective. You'll find my full market breakdown in blog format at the link below if you'd rather scroll through the numbers on your own. And if you're into this kind of calm, data-driven real estate insights, hit that like button, subscribe, and turn on notifications so that you stay ahead of what's next, not just what's now. Thank you for watching, and remember, emotion is expensive, but data, that gives you control. I will see you in the next one.